Hi there, welcome to Kneppy Invest and welcome to another answer and reply video. It is Saturday, 24th of January, 2026. Time is currently 8:43 a.m. Now, before we get into answering your questions or replying to your comments, my plans for the next few days. So tomorrow I will release a technical update video for all, and I'll also release a technical update video. I'm not sure exactly what on at this point in time for members only, and I'll release that on Sunday evening just because of one of your comments. So I did or have released those videos on Monday morning in the past, and then on Mondays, since it is Australia Day, no trading on the ASX. Yes, ASX is closed. What I'll do is I'll reveal my 2026 stock picks. Now, I do consider this to not be a very serious exercise, more of a fun exercise, picking for a full year, just simply because your end period is set. That means you sell all the companies at the end of the year. That's the way I look at it. So it's very hard to know exactly which companies are going to do well over 1 year period because we just don't have, we have a lot of incomplete information at this point in time. Anyway, so I'll consider this to be a fun exercise, and I've limited myself to only pick companies that I don't own or trade at this point in time, or that you didn't pick, which means I've really limited myself, but we'll see how we go. I have a list of quite a few companies, and I do have these two portfolios or two strategies I'll be following. One is beaten down companies, and the other one is Specky stocks. And I am finding it really hard to choose Specky stocks right now because what I'm doing when I trade Specky stocks is I look for a catalyst. I'm looking for the catalyst, and typically a catalyst is just an announcement, and I have no idea which of these companies are going to release an announcement. They could release one tomorrow or none at all. Okay, so let's get stuck into answering your questions. And the first one is from a name I've never heard of before, Nyrstar Projects. Always good to be answering questions from maybe a first-time poster. And maybe Nyrstar has written a few other questions in the past, but this is the first time I've really noticed Nyrstar, and pretty nice name as well, Nyrstar Project. If, hypothetically, you had been trading that stock, which I believe was Austral Resources, AR1, that went into long-term suspension, and you had high conviction that it was going to significantly drop when it resumed trading, would you just try to sell with the rest of the herd and hope to keep your order met before it went down 70%? The problem with that is when a company like this starts trading again, share price immediately drops 70%. So you can't get in before the share price drops 70%. It automatically drops 70%. So that is a problem with this. So let's confirm this, and I did confirm it. Yeah, because I knew, because this is the first question, a lot of times I will actually have a look at the first question. And Austral Resources was in a suspension for a while, and they came out of suspension on the 5th of November. Share price immediately dropped, well, on the day it dropped 70%, but it opened at 5.5 cents. And the share price actually closed at 4.7 cents. So if you sold on open, you did get near the higher of the day. High of the day was 6 cents, low of the day was 4.6. And share price actually did fall, it did fall a little bit over the next few weeks. But look at what the share price is now. It's at 12.5 cents. And I actually am trading this one right now. I am trading Austral Resources, and they released a nice little comment. They're a copper company, if I remember correctly. They released a nice little comment, and the chart just has gone bananas. And look at the volume coming in as well. In hindsight, it would have been better to be owning this company through this period, be patient, but you just don't know what's going to happen. And probably the main thing here is you can't beat the market in this sort of situation. The share price is going to open down. So you can't get in before the herd starts selling. You are the herd. You'll be joining the herd when it comes to selling. The question becomes, in this sort of situation, when do you sell? And that's a hard one. That is a hard one. If we go back to the trading on that day, share price swung from 6 cents to 4.6 cents. So there's a big swing or big range in share price on that day. And the share price did get to a low after that. Looks like the low was 4.3 cents. So the low was actually near the low of that day. Anyway, that's hopefully I've answered your question to your satisfaction. Okay, Marist 64. Hi Kneppy, like to hear your thoughts on overseas index investing. Came across a Belgian company, Nyrstar. They're going to be the first company in Australia to produce antimony. The chart is nothing to look at. They also have a zinc smelter in Hobart. So, your thoughts on overseas index investing? Well, I actually don't mind overseas index investing because it does give you exposure to countries that otherwise you might not be able to get exposure to. So if you really think that India is a growing force in the world, maybe buying an India index ETF. India index ETF ASX. I'm assuming there is quite a few. Here's one maybe. India Quality ETF. Yeah. NDIA. There you go. Is it on the NASDAQ? Well, I've got to log in. That would be helpful. Yeah, I was looking at Austral quite a while ago. NDIA. There we go. So hopefully that's what you're asking. Your thoughts on overseas index investing? Yeah. Okay. Came across. Yeah. So I think if you are bullish on an overseas market, that's probably a really good way to get exposure without investing in individual companies. Came across a Belgian Nyrstar, NYR. Let's just have a look at the chart. This one is Brussels. I'm wondering if I can invest in this in my super. Not that I'm. Oh, hello. Look what happened on the last day. On Friday, share price rose 31.34%. And this particular comment was 6 days ago. So this was before this big rise. Hello. I'm not sure what happened, but something happened with Nyrstar on this particular day, on Friday, because the share price popped up and it was on really big volume. They must have released something. What you could do in this sort of situation is Nyrstar. Is that the news? Did I spell that right? There's a chance I didn't. NYR star. NYR star. I missed the R. There we go. Okay, Qoria Zinc says US smelters waste pile has 3 billion in metal. Nyrstar to get 135 million bailout for struggling smelters. That's 5th of August 2025. So that's old news. So the only thing I can see here is this particular article talking about a smelter in Tennessee. Qoria Zinc says US smelters waste pile has 3 billion in metal. Cancel. It can process $3 billion worth of leftover metal from an old US smelter it plans to convert into a giant critical minerals complex. The company, one of the world's largest processors of zinc and other metals, bought the Nyrstar processing plant. Okay, so that's why that was brought up. What else? How else could I find news on this one? Why has a share price popped up? According to this, they have no revenue. That's interesting in itself. Okay, so just the chart. The only thing that's drawn me to this particular company is the chart right now. Now, if this didn't happen, I would have looked at this chart and went, not for me, because I don't know much about the company, but something has happened. And not only has something happened, the share price has broken out. Yeah, put this little line right there, and the share price has broken out. This could be the definition of a breakout. Nyrstar company I have never even heard of until Mara64 has just brought it up. First company in Australia to reach antimony. The chart is nothing to look at until now. Until now. They also have a zinc smelter in Hobart. So thank you for that, Mara64. And it continues that you give me ideas. You bring me a lot of ideas. So I love when people bring me ideas like a Nyrstar. Not that I'm going to do anything with that idea, but I think it's very important to be aware of companies like this. And maybe one of you will take a position in Nyrstar because of this particular comment, and then Nyrstar share price goes from 8.8 cents to $8 million, and you could become filthy rich. And we all hope that does not happen, unless it happens to me. Luca Brasi says, Kneppy, are you aware of a New Zealand company called Rakon? No, I'm not. Just like not aware of Nyrstar. I'm not aware of this company called Rakon. I saw this comment and I went, whatever. And then I had a look at the chart. I went, oh, what's happening on here? So I actually did Google Rakon. Just to say, Rakon, New Zealand-based global technology company specializing in high-precision frequency control and timing solutions. I went to the website, not the website, the Wikipedia, because I'm lazy. Revenue of $171 million in 2022, so a little bit late. And I was like, okay, that's interesting. US company Borns tries to take over New Zealand chip maker Rakon. It's like, oh, New Zealand chip maker Rakon, valuing the Auckland tech company at 356 million, 72% premium to Friday's close. And that is why I'm talking about it. But in this sort of situation, because if you have a look at the chart, you can see the share price actually popping up, Rakon. And so this intrigued me. Why the share price pop up on the 12th of January? And that was because of a takeover bid. So typically when I see a takeover bid like this, I typically lose interest. Now, if this was on something else, I would have been much more interested in Rakon. But anyway, a takeover bid for Rakon, and congratulations to those who own some shares in that one. Now, if I actually own shares, more than likely I'd be selling out, because who knows what's going to happen with the takeover bid. It could fall apart and the share price could plunge back down. Okay, some really good insight from Ben Hutchinson in regards to the science of clarity in Telix, talking also about the differences between the isotopes that Telix uses versus what Clarity uses in regards to diagnostics and therapy. So Clarity uses copper-64 for diagnostics, copper-67 for therapy. So have a read of this. It's a really good read. I'm not going to read it now because it's long. Capel Seth. Oh, this is the one. Yeah. So Capel Seth just mentioned this is a members-only video, potential trades, and he would like it to be released on a Sunday rather than a Monday morning. I could definitely do that. So what I'll do is I release 2 videos at the same time, a video for everyone, technical update, and then a video just for members. That is something I'm going to do moving forward. So always on Sunday, 2 videos. And typically that members-only video would be potential trades or my trading positions, something like that. So thank you for that, Capel Seth. If you're a member and disagree with that, if you like it to be released on Monday morning, well, you can just watch it on Monday morning. So there's actually no negatives releasing it on Sunday afternoon or Sunday evening. If someone requests that, I can do it. Groovy Shoes. Hi, Mr. Nepp. Way to that. I'm trying to remember what the name is. WT2V, way to that or something like that, just popped up. Glad you didn't misspell that and say pooped up. That would be a very different story. Anyway, so this company has just popped up to an 18-month high on slight uptick on volume. Just saying, this is something I always look for. Now, let's have a look at the chart. Way to that? Yeah, way to that. And it has, yeah, so this one has gone down a lot. So they listed when every other company on the ASX listed. Well, I shouldn't say that. So in 2021, so a lot of IPOs, late 2020 into 2021, and a lot of these companies showed the same sort of sign, share price just collapsing. They took advantage, and what we're now waiting for is any signs of life from these companies. And you could say way to that is maybe showing some sign. Share price has actually doubled. It was actually at 0.7 cents late November, has gone up to a high 15 cents recently. And there has been a bit of an uptick in volume, a very subtle one. You can actually see it on the weekly chart, just a subtle uptick in volume, particularly when the overall volume on the ASX has been a little bit lighter. We've seen a bit of an increase in volume. So the weekly chart also shows that as well. So share price of this one has been going sideways for a long, long time. Now, this company is a small company, probably a market cap maybe 10 million. Let me have a look. Oh, 31 million. So it's a little bit more bigger than I thought it was. This company also releases Appendix 4C. So they haven't released one just yet. And, they did a consolidation. So share price was probably like 1.3 cents or something. I wonder if this was a 10-for-1 consolidation. It would have to be. Couldn't be anything worse. Yeah, 10-for-1 consolidation. That makes sense. And in October, let's just have a look at their quarterly report. So there's a chance the market is expecting this to be a good quarter. So they're buying early. Receipts 977,000 and operating cash flow negative by 786,000. And in fact, I'd say it's 1.3 million because they did receive, wait there, net client receipts from tax authorities. I have no idea what that is. Anyway, so the company quite isn't at the point where I get really excited, but the chart is something else. I actually don't mind this chart. I'm going to put this onto just my watch list. Put this onto my watch list. That's about it. Digi0422 says, would you say that this is a start of an uptrend for is that Dateline? DTR? Dateline? Yeah, Dateline, right? Isn't this one of the best performers companies in 2025? Massive bagger. So if it's been in a massive uptrend, well, okay, I can see. Yeah, okay. So yeah, the share price was like 0.3 cents at one. This time last year, the share price of this company was 0.2, 0.3 cents, and now it's 42 cents. Okay, so the share price rallied significantly, and this little breakout is exactly what I'm looking for. So beautiful breakout for Dateline back on the 2nd of May. In fact, you could even say the breakout started just before that, a hint of a breakout. But definitely on that day, share price rose 200% in one day. And there'll be a lot of people saying, no, you're too late, you're too late. You have to get in before. Share price on that day closed at 2.7 cents. And people would be totally against buying this. But this is the classic breakout. I'm assuming they released something really positive. Share price was at a long-term high. And the share price went from 3 cents to a high of like 70, almost 70 cents. Share price has pulled back a fair bit, and it looks like the share price is moving back up. Interesting day on Friday. What happened there? Friday, share price went up 12%, but it actually opened down. So intraday rally there for a Dayline. That's actually pretty good. I don't mind this chart. I actually do like this chart because I think all those who probably wanted to take profits are probably out now. So all those who are buying when the share price was going up, maybe even all those who bought near the highs, they're all out now. And the share price did correct a fair bit. Let's have a look. So down 74% from the high to the low, and now it's starting to rally again, I think. So yeah, I don't mind this chart at all. Question becomes, I'd say this is an uptrend. And you can just see how it accelerates. And I really like this. I was actually listening to a podcast this morning, and they're talking about bubbles. And one of the signs of a bubble is, it's pretty obvious, we see an acceleration to prices. And that really lines up to when I get a little bit more nervous when I see a company's chart. And a great example of this is DroneShield. And this was a few years ago when the share price of DroneShield just accelerated up. It was just accelerating. And then all of a sudden, share price just dropped. In fact, I would classify this as a bit of a very short-term bubble. In fact, on that day, the 16th of July 2024, share price dropped 22.3%. And I sold out the previous day just because I just didn't like how it's accelerating up. And there were one expert I know who said there's no reason to be selling out on that day. And I just saw this and I went, it gapped up, there was just too much froth, and then the share price dropped 22% in the next day. And that, to me, was a bubble. That was a bubble in DroneShield itself. And then sometimes it can take a while for the bubble bursting to play out. And then we've seen the share price now be significantly volatile for DroneShield. I still think DroneShield is more of a plaything for day traders right now. Anyway, if we go back to Dateline, this was accelerating up as well. It was not sustainable. And then probably the time to get out was the day it dropped 25.2%. That was, and you can actually see the share price rallying after that, but that was sort of the first sign of the share price perhaps falling much further. And I think that's over. I think all those who wanted to sell out have sold, and a little bit less resistance. Now, the share price is not at a long-term high, but I think it's okay. Just because Dateline is in all our minds, just because it was one of the best performers, if not the best performer in 2025. Sensei says, thoughts on 1 year and 6 month chart of Blinklab, BB1. Too late to hop on and buy, or best is yet to come, and will grow upwards. 88 million shares, 84 million market cap on 20th of January. BB1, I actually did a chart for this not that long ago, I think. So you wanted 1 year and 6 month chart, which is perfect. So this is a 1 year chart. This is interesting because the breakout for Blinklab happened in February. Not know what happened, but you can see the volume coming in. Share price popped up, and the share price back then was 34 cents. So share price has almost tripled since then. Chart still looks pretty good. So we saw also a fairly rapid rise in share price back in early December. Share price has pulled back and found a bit of a floor. Now the share price didn't pull back as much as what we saw with Dateline, but it was a nice little 32% drop, and it fell into a nice area. I would say even that could have been support there. Nice little support area. Not only that, it's fell towards the 100-day moving average. Share price went up nicely on the 14th of January. Bit of a pullback. So I still think the uptrend is intact, but I would like to see the previous high get overtaken. So I want to see this get to a new high. Yeah, but the very fact that there wasn't as much selling as we saw with Dayline just sort of tells me that there could be still more upside. Look at volume, probably like to see some higher volume coming in. Anyways, but the uptrend is still intact at this point in time. Probably the price I'd sell out would be if the share price drops below about 76 cents. That would be a sign for me that it's struggling. But if the share price gets to a new high, so above $1.10, that'd be a really good move. That's probably the other thing when it comes to forecasting share price movement. There's no certainty. There's no certainty at all. It's all about probability. It's all about probability. So it's neither black or white. It's not 100% chance going to happen or 0% chance. It's about probability. Okay, Timbu says, love your daily video. Is Qoria not an event killer today as per your previous videos? And the easy answer to that is no. And the main reason it's not an event killer is because the price of Qoria was already in a downtrend. And the whole point of a trend killer event is share price of a company must have an event that shifts sentiment or the trend. Shifts, that changes, shifts. And Qoria was already in a downtrend. So that can't be a trend killer event. Now, the problem with Qoria is the share price just keeps on dropping. So still, there's a lot of, it's out of support, or just above support, which is about 33.5 cents. That's my biggest problem. I think we should see it bounce. If we don't see it bounce, that is really bad news for Qoria moving forward. I still think this is an overreaction for the market, but at this point in time, potentially I am wrong. Okay, so on to trend killer events. I do have a trend killer event watch list, by the way. If I can find it. There it is, trend killer. So you'll be able to see what's a really good example. Appen. I am trading Appen right now. This is the perfect example of a trend killer event. Share price in a well, I wouldn't say beautiful uptrend, but a lot of interest in Appen back in late 2024. Share price broke out on the 30th of July at about 60 cents or so, went up to $3, and it looks looking pretty good. And then all of a sudden on the 26th of February, must have been results. I think it was results. Share price went down 33% on that day. Trend killer event. It just shifted sentiment from positive to negative, and the share price dropped a fair bit from there. So you definitely see a shift in trend. What else? What else do we have here? Maya. Yeah, Maya, look at this one. It was actually a nice little uptrend developing in Maya. This was in early 2025, and they released something on 13th of January. The market didn't like it. Share price down 23%. And then the share price, look what's happened since then. Share price has gone down a lot. So again, shift in sentiment, shift in trend killer event. What I like to find is trend killer events on the opposite side. I don't see as many as those as we typically do see. An example, I'm going to show you an example where it doesn't work. This is not 100% foolproof. And I always bring this one, Ventia. Share price of this one was in a beautiful uptrend. It looked like there was a trend killer event on the 12th of December, down 22.56% for this type of company. That's whoa. I forget what it was. And then the share price has rallied since then. So it seems like for some reason the market overreacted on that. So that was not a trend killer event. So these are not 100% in. I've got MTO. Yeah, I'm not sure which one that is. I'm trying to find a trend killer event that's positive. With the share price wasn't. These are much rarer. These are much rarer, and I'll show you a really good example why these are rarer. It's just because of the. What's a good way to say it? It's just because of the psychology of the typical investor, and greed is way less powerful than fear. Yeah, so when you see these trend-killer events, share price in an uptrend, trend-killer event, fear is the main driving force. Now, on the flip side, when a company is in a downtrend and they release something positive, fear is not that powerful. It's not powerful enough to eliminate all the fear of these investors who have a holding a down track. They see the share price going down, and they just have to get out of this dog stock because the share price is going down. So when the company released something positive on the 24th of November, share price on that day rose 20.57%. There was some buying after that, but the share price has actually fallen. Well, what happened on Friday? That's an interesting day. A lot of selling happened during the day, but even that day on Friday, a lot of selling came in. And the main reason a lot of selling came in is because all these people bought at higher prices. In trend killer events the other way, you do see a little bit of psychology there where you see the share price dropping and some people go, oh, the company is now 20% cheaper, I can buy in. But fear, again, is much more powerful than greed. And that is why I see far less trend killer events in a positive sense than what I find in a negative sense. And I just can't remember any of these. Redox is another one. Great example here. Share price in a bit of uptrend. They released something negative results last February. Share price dropped 20.88%. And I was trading Redox at the time. I got out straight away. For me, that is now, sometimes the share price can rally. So I don't sell on the day. I usually wait just to confirm as a trend killer event. And the reason I say that is, was it Doug? It was either Doug or I think it was Doug. So I'm trading Doug now, but Doug, here it is. Yeah, Doug on the 28th of February 2024, again, results. On that particular day, share price only dropped 4%. But the low that day, no, it closed at 244. The low that day was $1.80. And that low was near open. So there's a lot of buying coming in. So this is why I was trading Doug at the time. So this is the benefit of just waiting, just to see what happens during the day. And you can just see what happened after that. Share price kept on going up. So this was not a trend killer event. Even though it had the possibility of one, I think you have to wait until the end of trading just to see. And by the way, the volume was a little bit higher. Anyway, so trend killer event. So that's why Qoria is not a trend killer event, because the share price was already in a downtrend. Now, if the share price was an uptrend and this happened, that would be a trend killer event. DG Home and Garden. Hi, Kneppy. 1E, 2Ps. Have you ever considered trading natural gas? It is up 40% in 2 days due to cold weather in the States. It is going to be cold. I actually do have a look at the National Weather Service a lot, because I used to look at this all the time because I lived there for 8 years. And you can see all this color. That is winter storm warnings. So I lived in Oklahoma, and they are expecting some significant snowfall. So they're expecting in Oklahoma City 12 inches of snow, 12 plus inches of snow, which is going to shut down the whole area. It will shut down the whole area. Fortunately, it doesn't look like they'll get as much freezing rain. Freezing rain is the most beautiful thing you ever see, but it can be destructive. It can bring, if you get a lot of freezing rain, it can bring down power lines. Sleet is not that bad, but this is going to cripple. I'm going to say this is going to cripple large portions of the southern and central parts of the United States. Northern parts of the United States can handle this well. But large portions, not Florida because they're fine, but large portions, say Texas, Oklahoma, all these central southern states are going to be significantly affected. The other place I lived was upstate New York, in a little town called Brockport, just west of Rochester. They're forecasting snow, maybe not as much, but they can handle it. I saw, was it 4 feet of snow in 3 days in where I live there, and it was like a little blip. That was all, a little blip. It all depends on how much snow a place typically gets. So, and the other thing is how cold it's going to be. So if you go back to Oklahoma, now these temperatures are in Fahrenheit. So they're expecting temperatures like highs of 12, low of 6. In fact, there's a low of -2. So you do the calculations. So 32 degrees is 0, 23 is -5, 14 is -10. 5 is minus 15. So they're experiencing at the lows minus 20 degrees Celsius. And in fact, they've even got warnings, extreme cold warnings, that sort of thing. And that is a good explanation to why potentially, if we have a look, if I can find it, I'm just going to agree with the poster that natural gas prices was going bonkers the other day. Here it is. Yeah, natural gas prices went bonkers. And the reason I say that is an interesting story. I actually did work as an intern on the largest trading floor west of Chicago. This was in Tulsa, Oklahoma. I worked on a trading floor where actually they did trade natural gas. But here is what was really interesting to me. I found actually the work quite boring. Here was really interesting to me. And I did work as a meteorologist, by the way, interning. I got a lot of money, by the way. Here was really interesting to me. So what happens at the start of the year is there's official forecast, whether or not the winter is going to be colder than normal, warmer than normal, that sort of thing. And the money made isn't forecasting whether it's going to be warmer or colder. It's actually forecasting the official forecast. And a lot of the people who are working there would actually know who was doing the official forecast. And they knew, oh, this person's conservative or this person is less conservative, what they might look at. So the seal was actually forecasting the official forecast, not forecasting what was going to happen. It was forecasting the official forecast, which I found absolutely fascinating. And that is how the price of natural gas actually moved, is actually the official forecast, which sort of makes sense. So there was one year where the meteorologists made this company, it was called Williams. They made Williams, I think it was $100 million in like a few days. And the bonuses they got were pretty huge. I was like, ooh, I found the work fairly boring for me. I didn't find that stimulating. And the only reason I think you'd enter that sort of work was just because of the money. Now, in saying all that, a very highly volatile sort of sector. And most of those meteorologists were sacked or not sacked, but they were fired within a year. So the price of Williams, share price of Williams dropped. In fact, I can show you right now because they're a publicly listed company. The share price of Williams dropped. I'm going to go all the way back. We'll have a look at the weekly chart. So this was in 2001. Yep. So I started interning there. So actually it was, so I started interning there sometime in 2002. And the share price went from, before I worked there, share price was in the 30s. And by the 22nd of July, 2002, so I was interning at that point, share price had collapsed to below, 84 cents. And the main reason behind that was Enron. So fairly similar companies. Enron, not only Enron, there was price manipulation of energy into California at the same time. I'm trying to remember when Enron went bankrupt. Yeah, there we go, bankrupt 2001. So just after Enron went bankrupt in 2001, Williams was found to be manipulating energy prices in California. Manipulating, I think that's the story. Manipulating California. Anyway, here we go. During the California energy crisis of 2000-2001, Williams Companies was a key participant in market manipulation schemes. Yeah, so that's why the share price plummeted. And I still remember when the share price got below $1, because I had very little money, even though I was making a lot at that point in time. As a student, any money you make, you didn't invest. You needed that to live for the next year or so. And I remember saying to my dad, I wish I had a lot of money because I'd put all my money into Williams Companies at the point, because the company's going to be bailed out. And the company was bailed out by the government. And the share price currently is, what is the share price now? Is $65. And that's sort of, I just remember that because I just had the feeling this would be sort of like a great time to buy. And anyway, so most of those I was working with were fired because they just had to get rid of a lot of people because I'm not sure if it was a deal with the government or something, but yeah, they all found different work and different companies after that. But that was my exposure to trading natural gas. And yeah, natural gas is really important to heating homes in the United States. Kelly Ma says, Aruma, a new copper play. I did mention Aruma the other day, didn't I? What are your thoughts on his chart today? Thursday, 22nd of January. Looks like breakout with powerful announcement like LNQ. AAJ. Which day did I mention AAJ? Oh, that was on the Thursday. Yes, so that was on the Thursday. So let's remind us of AAJ Aruma. Let's go to the daily chart. Okay, so share price has pulled back. Share price got to a high of 4 cents, has pulled back to 2.6. The question becomes, are we going to see some buying, which will force share price higher? On occasion, you should just see share price keep on dropping and dropping and dropping. So that's the big thing with Aruma right now is, will we see any buying? What's a good example of this? Oh, Loomis Diagnostics is a perfect example of this. Not absolutely exactly the same, but when I bought, you can see share price popped up. It's a little bit different because there was no resistance for Loomis. Share price popped up on the 16th of July, 144.83%, and then we saw selling continue for a few days. Selling just dried up on the 22nd of July, and then we saw a really good update on the 23rd. And if I was being honest with myself, that was the time to get in. I got in a little bit earlier than that, but that was the time to get in because the selling had stopped and we saw some buying interest in Loomis Diagnostics. And we've seen the same thing here. We've seen selling, a bit of selling. Looks like selling might have come to an end, maybe. But we don't want to see share price drop any further from here, or I might be taking profits with Loomis Diagnostics. Anyway, so looks like, I don't know what the announcement was. I forget. AAJ. Oh, that's right. They're quite a high-grade copper sulfide project. I was actually going to look at this one, but I forgot. So this could be company making. I don't mind acquisitions because some of these acquisitions can be company making acquisitions, and the market might be thinking likewise, maybe. We'll just say maybe at this point. Maybe. Yeah, I'll put this down. I'm going to put this down. I put down a few charts I like every day. Reese M, shout out to South 32. Oh yeah, I didn't forget this one. I did say they released results, and South 32 actually rallied when I believe other commodity companies went down. So the chart still looks really good for South 32. A beautiful chart for South 32. Somebody asked me, was it last week? Why does South 32 chart looks good? Well, hopefully it's pretty obvious. Now, probably the main negative thing about South 32 is the share price has accelerated higher. I'd like this to be a little bit less, or show less acceleration signs. So I'm not trading this at the time, but beautiful chart. The time to get in South 32 probably would have been back in early December. Yeah, at about 3:30. Share price has gone up, what's that, 33% since then. Sensei says, did you know that Boss Energy was a 100 bagger from early November 2020 to early February, which was only a 3-year and 3-month period? And what I found is most of the really big baggers on the ASX are mining companies, particularly mining exploring companies. And that is why I'm now looking more keenly at those for my pursuit of 10 baggers. If I got a 100 bagger, that would be ideal. So let's have a look at Boss Energy. And a really good thing you can do is look at the reasons why the share price of Boss Energy broke out. So don't have to look at the chart now. Let's go back in time. Okay. So there wasn't really, doesn't look like there was any significant breakout. It's just a bit of a trend shift. Well, sort of. Really, the chart was not doing anything, and then maybe had to do something with the price of uranium. But it looks like there was any significant event that really you saw the share price pop up. And the reason I say that is, let's have a look at this company called AR1 Resources. Actually, was it this one? No. Yeah, let's have a look at this one. So this is was it a recent listing? This was back in February 2022. Share price did nothing. And then all of a sudden, on the 22nd of October 2022, share price went up 418.52%. And again, people would be saying, no, you're too late, you're too late. You don't want to chase when a share price of a company goes up 480%. That's ridiculous. No, that wouldn't scare me at all. And the main reason is look at the chart, the one-day candlestick. It's a beautiful one-day candlestick, all buying that day. Share price continued to rally. Now, the share price will see a bit of fluctuations. Share price went sideways for a while, which is sort of normal. And the share price went up and up. So you could have bought, say, at the end of trading that day, which I sometimes will buy on the day, particularly near close when I realize the share price will probably finish near the high. So you could have bought at 60 cents on that day, and you would have had a 10-bagger if you remain solid. And that was on the July. So you would have a 10-bagger within 8 months. And the share price just kept on going high. You would have had what's that? You would have had a 40-bagger within a few years. That's AR1 Resources. The other one was Chalice Mining. Yeah, I remember this one because I saw it at the time. I was like, no, maybe. And then this was in 2020. I'm pretty sure. Yeah, so Chalice Mining not doing anything. You can actually see back in March 2020 during that's why I remember this, because it happened during the COVID-19 financial panic. And the company on the 23rd of March released something, share price up 137% on that day. You could have bought at 30 cents. And they must have released something really good on the 15th of April. And yeah, that was the start of it for Chalice Mining. So this is why right now I'm on lookout for these sort of events. So Chalice Mining, have a look at Chalice Mining, AR1 Resources, and this is what I'm on the lookout for right now. Anyway, are you sure Boss Energy says 6 cents? Did they do a consolidation? Because if I go to Boss Energy and go back to 2020, share price was never 6 cents. 6 cents, not the movie. 6 cents. It's not cents. Cents. Not like a 6 cents, but a 6. You know what I mean. So according to this, the share price was as low as 26 cents. So they must have done a consolidation. Okay. Trader Hooper says, did you see the GIB update? Only mentioning because I didn't realize they're a gold producer, so perhaps others also don't know. And I have to admit, I did not see it. GIB, Gibb River Diamonds. Well, probably diamonds. As soon as have very little interest in diamonds at this point in time, unless they prove something to me. And maybe that's why I missed it. So mining and production update. Yeah, I did not open this up at all. Oh, I can see why, 10:02 a.m. There is a period of time when I am more susceptible to missing an announcement. It's typically between about 9:55 and say 10:10. That's because the market is opening, and I'm more interested in how the market has reacted to all those earlier announcements. And sometimes I will missed mistimed announcements. Not all the time. I pick most of them up, but I usually do like these mining and production update. So let's have a look at this one. Pleased to announce that processing of Netta gold mine material is now complete. There you go. The one thing I like to, so we're at production. I do know some people refuse to buy. They think it's, because they've moved into production, it's too late. Gibb River Diamonds. They have to change the name. Ooh, share price went down a fair bit, down 15.5%. Overall, the chart looks okay. I am going, you know what I'm going to do? I'm going to put this into my gold watch list. There it is, gold watch list, Gibb River Diamonds. I have to change the name to Gibb River Gold. Thank you for that, Trader Hooper, because I completely missed it. Martin Grange, hi Kneppy, would you please send a link to Armchair Analyst? For some reason, sometimes I really have a hard time pronouncing analyst. I have to think about it. Analyst. If I just try to say it without thinking about it, I can't say it. Analyst. Analysis. I think it's because analysis is pronounced subtly different than analyst. Anyway, Jason Segal, you spelled his name right. There's this actor called Jason Segal as well, but I think his last name is spelled with 2 E's. And Steven Segal, I'm pretty sure, has 2 A's. I could be wrong. Segal. Yeah, 2 A's. And Jason Segal. Oh, a really interesting story. So I Googled Armchair Analyst, and I won't put in, and I think I spelt the name wrong. And yeah, and what popped up was Jason Segal, armchair expert with Dax Shepard. I went, oh, what's happening there? And yeah, Jason Segal, the actor, has 2 E's, and Jason Segal, the armchair analyst, has 1 E, 1 A. Anyway, so subtle differences. Anyway, so I have left a link in this particular comment, and all you have to do is the Armchair Analyst, and this is the page. And there's another question coming up in regards to Mr. Jason Segal talking about Osteopore, which I'll show you that in a second. So all you have to do is Google Armchair Analyst, and it should pop up. So if you just Google Armchair Analyst, let's see what happens. Yeah, you get not what you want. So you just put in Segal. And then straight away it pops up. There we go. Pops up straight away. If you click on one of these links, there it is. That's exactly what you want. Okay. And he's a great read. Releases something every day. Oh, this one's late. So this one only goes to January 16. So what you might want to do is, yeah, there we go. So releases an article, newsletter every single day when there's trading. So let's see if it releases something on Australia Day. I doubt it. There's no need to. Rich Christmas cake. Can you please show the fish photo or share it? Sounds great, but I couldn't see it. Well, you couldn't see it. This is a photo I'm using right now. You can't really see it. Reminds me when I was canoeing a fish, jumped out of the water just as I was bringing the oar forward and bumped the fish into the canoe. Anyway, so let's have a look at this fish. So it's not as exciting as that. Where is my photos? Here it is. This is the fish. So all I was doing, I want to extend it. There we go. So yeah, all I was just taking a photo. It was a really nice photo, and then I did notice there was, you can see this little, like a little ripples. There was a fish that jumped just before this one, and I thought, oh, that would have been really good to capture a fish jumping as I was taking a photo. And then I just aimed up. In fact, I'll zoom in so you can see it better. There it is. So I zoomed in, not zoomed in. I got my what I wanted to take a photo, and then I clicked. I had no idea there was a fish jumping, but just after I finished pressing click, I heard a splash, and I went, oh, maybe I got a fish jumping in. Perfect. And not only that, you can actually see the shadow. Yeah, so that's one of the reasons why I like this photo, is because it was fairly calm, and you can just see shadows. I love when you see reflections in the water. It really gives it I don't know what it is, but it gives a nice feel. So you can barely see it, but yeah, photo bomb from a fish. First time that's ever happened to me. Oh, here we are. Kelly Ma says, I could not find the article which the Armchair Analyst wrote about Osteopore. Would you please do me a favor by showing where you find the OSX article he wrote? I went to his website, but could not find it. It was an article solely focused on Osteopore. It was in one of his daily write-ups. It would have been big volume, boring news, why stocks move on nothing. Now, I get these in my email because I've signed up. So he does go through some interesting announcements from companies on the ASX. So for this day, there was LTR Pharma, Amplia, Firebrick, Osteopore, Entropy Neurodynamics, which is a company I've never heard of, Cogstate, Compumetics, EZZ, and Tetra Therix. Talking about cash injection, M&A, Big Pharma wants a wife, And under a microscope, looks like Celerity Therapeutics. And then second, so it looks like he's talking about two companies. And here it is, Osteopore. So yesterday, Osteopore traded about 1.4 million of volume on a change in substantial shareholder notice. So go through that and you might learn something. Not guaranteed, but you might learn something. I did. So again, I'll just go back to this one. Again, big volume, boring news, why stocks move on nothing. And then Osteopore released an announcement the next day. Anyway, Oh, another one from Kelly Ma. Hi, Kneppy. Kneppy trade portfolio 16.57%, while Specky trade 28.23%. Isn't it better than Warren Buffett's annual rate of return? God blessing you on maintaining this kind of return during investing life. Thanks for sharing. I got to watch this video for a couple of times. So this was my members only video where I go through some of my trades, the setup, my thoughts, and also I provided how my portfolios are performing. So I'm going to do that right now. Now we'll start off with my quality. And what I'll do is since first purchase. So this is my hold and hope sort of strategy. That's a horrible way to say it. High quality companies, that sort of thing. Since first purchase, what I'm aiming for this is double the market returns. And my benchmark is ASX 200, which is a fairly easy benchmark to beat, to be honest with you. So up 22.36% per annum. Now I'm going to just change tact here. And what I'm going to do is since financial year. And the reason I'm doing this is because my other two portfolios is since the start of financial year. And there's reasons behind that. So quality portfolio since the start of this financial year, 1.33%. And this is because a lot of my companies I do own are more techie and tech stocks. Apart from, you can see currency change has had a bit of a drag on me as well. Australian dollar's been doing fairly well recently. So that's been a bit of a drag and not as much dividends. Capital gains similar. Anyway, so this is the quality since the start of financial year. Not doing that well. Now, I'll go to my next one, which is called Kneppy's Trades. The reason I'm tracking this since July 1st is really simple. So for my new house, I wanted a little bit of money to do all these extra stuff like landscaping, buying a new TV. So I set aside some money and I thought to myself, it's pretty stupid if I can make some money on the stock market to actually dip into my investments or my savings. So I said to my parents also, they're retired. And they've got a fair bit of money, and a lot of that money is in term deposits. And term deposits, the interest you get on term deposits have been going down, that sort of thing. I would not give any financial advice to my parents because the main reason for fighting among family members, husband and wife, I think is financial reasons. So you don't want any financial reason to be fighting. Anyway. And I could not give any financial advice because what happens if something goes really badly? I'd feel really bad. Anyway, so what I said or suggested was, hey, Mum, Dad, why don't you give me $120,000 and I'll give you 5% per year, which is more than term deposits. And this way I don't have to go to a bank and say, hey, can you give me $120,000 at an interest rate of 7-8%? So it's a win-win for everyone. They get more interest. I get a better interest rate on this. And I think I can beat 5% returns. And I said to them, I'll set up this share site so you can see how I'm doing. I also said to him, I'll give him 10% of my profits each and every year. And I'm sort of thinking I'm going to backtrack on that because, and a simple reason, because I'm actually doing fairly well. So at this point in time, since I started this particular portfolio, it's up 16.15% compared to the STW, up 5.94%. And that's doing really well. So this is a more active strategy than the hope and hold, which is my quality. And yes, I am doing really well at this. Maybe I should be focusing on this sort of strategy moving forward because 16% in just over 6 months, we'll say. Yeah, it's just over 6 months. That's a pretty nice return. Now, the order market's done okay as well. But what about my other strategy, which I call risk trades in share site? I'm going to call it Specky trades. All right, so I dipped into this when I got back from my trip, or during my trip, I think. Bloom's Diagnostics, that was my first foray into this one. I've tried this in the past, and I've always found it to be a little bit more stressful, and I didn't like that. And when I started doing this again, I found it a little bit more stressful, and now I have relaxed. I've really relaxed doing this, and in fact, I like doing this. And maybe it's because this particular strategy is doing really well for me, and it really makes sense. I call this sort of like a venture capitalist strategy, where I buy a lot of these small cap specky stocks, and a few of them are going to do really well. A few of them are going to do badly. But what I do is I sell out the ones I think are doing badly, and I just maintain a holding in the ones I do well. I've already sold out of a really good one, and at this point, up 33.98%. And I stepped into this strategy start of December. So this is over 2 months, up 33.98% over a 2-month period. It's not exactly 2 months, because you can actually see here, I got into Loomis back in July. And at this point, from July through to, actually we'll say November. So I started to really get into this strategy, it looks like the middle of November. So it's a little bit earlier. But I started to employ it a little bit more on my overseas trip, a little bit more, and then I fully got into this strategy. Looks like in the middle of November. So we'll say over a 3-month period, it's up 33.98%. But if you have a look at the returns, so what I'm going to do now is a little bit of cheating. So at this point in time, the amount of companies that are up 30% are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So 15 companies, share price is up over 30%. 3, we'll say 2 are up over 100%. 1 is 98, another one 88, another one 70%. So, and by the way, I've already sold out of our Alvo Min, so I've got to actually put that into my system. I've already sold out of Star Pharma, which I might have been a little premature. But if you have a look at the worst performing companies, so yeah, it's 3D Energy, but you can see I've sold out of most of them. So Island Pharma is probably the worst performing company right now at 23.37%. So you can just see, compared to the worst performing to the best performing, and you can see how this could work easily. So in fact, only one company has a worse result than 30%. 15 companies up more than 30%, one company down 30%. So at this point, you could say my success rate has been, I don't want to say it, but 95%, if you look at that. I wouldn't say that, because quite a few of these companies not really done anything, but yeah, doing really well with this strategy. And to be honest with you, I don't mind it. I don't put a lot of effort into wondering if I should buy or not. You can see, actually you can't see it. What I do is really simple. I put $1,000 in each position. That's it. $1,000 into each position. Don't have to think about it at all. And yeah, I'm thinking if I can keep doing this, what I might do is raise my initial position from say 1,000 to 2,000, and it's also shifted what I'm doing with my other strategies. And I'll talk about that more in a second, because I'm pretty sure there's a question about that. Yeah, Designation 8. What are your holdings, ASX holdings, in your super high quality ones and small as one? So in the past, my typical strategy was super, mostly high quality, but a few smaller ones in there as well that I think has potential, maybe a few small caps, micro caps. In my superhero, that is when I do most of my trading, including Specky and my Kneppy trades. But what I'm now going to do moving forward is my superhero is Specky trades, or Specky trades. My super, high quality, and Kneppy trades. So Kneppy trades is more of the profitable company, non-specky, put it that way, non-specky. And I'll just show you some of the companies that I am trading, Kneppy trades. So where is it? Oh, here it is. So Shape Australia, Genus Plus. So I've held those for 3 years. And in fact, Genus Plus is my largest holding. In fact, Genus Plus is already my super. I should also mention that. Mika, Southern Cross, Pioneer Credit, most of these are in my superhero account. And what I'm going to do is when I sell out of these positions, I will not sell, but when I sell out, instead that money is going to be used for Specky trades. And any sort of company that fits into this sort of strategy, I'll buy my super. So most of these companies are, non-specky, like Mass, Simul, Core lithium is a little more specky, but it's a little bit different. Core lithium is sort of in between. Laser bond, Gallon also is in that sort of, yeah, that's more specky. So some of these are specky, but I'm willing to put a little bit more money into them. Like Redox is my most recent buy. No, it's not. I bought one yesterday and put it into my super, and I forget. Sometimes I forget to put it into my TradingView. Anyway, that doesn't matter. But what the question here was, what are some of your current ASX and USA in your super? The reason I was talking about this is because soon my super will be holding a lot of my trades as well. Anyway, but I do have a watch list here. So my USA, well, this is a little bit wrong. It's got USA portfolio, but a lot of these actually are overseas, like Constellation Software, Volkswagen, Novo Nordisk. So PayPal, Amazon, Alphabet, NVIDIA, Adobe, Apple, Microsoft, Taiwan Semiconductor Manufacturing Company, Tesla, Shopify, Meta, Micron, Constellation. The last two are the most recent buys, and this has done really well. I think it's up 50% since I started buying, and a lot of that is Shopify and Tesla, but not Tesla, Taiwan Semiconductor Manufacturing Company. These are long-term holds. So when I buy this, no trading, just hold it for the long term. High quality companies in the world. Now, when it comes to Australian companies, I can be a little more active here. And I did actually sell out, not completely sell out, but I did take profits on a lot of these companies because, in my opinion, they were overvalued. Like Pro Medicus, I took some profits. Technology One, I took profits. What else? REA Group, I took profits. Yeah, so these are higher quality. I think Zero, I took profits. I can't remember. But a lot of these are high quality and companies that have the potential to be high quality. For instance, some of the smaller companies I now own, Visan, SKS, which, yeah, a lot of tailwinds behind that company. I have Kaiser Reef in this one, which is weird because I'm trading Meeker Metals, but I hold Kaiser Reef. So the way I look at this is Kaiser Reef is a trade because eventually I will sell it, but there's a lot of tailwinds in that. Clarity, you could say Clarity is more of a specky, definitely there. Orthocell, I think, is more of a specky. Austral, no, what's it called? Osco Healthcare, Corvus, Mayfield Group. Western African is another gold producer, which I think eventually I will sell out, but not just now. Neuropharmaceuticals, I've held that for a long time. Well, I think maybe 4 years now. And Electro-Optics is one of my longest hold right now, which is interesting because I bought Electro-Optics probably 2015, 16, I forget when. I had it all through the rise. I took some profits when I got to $10 back in early 2020. And in fact, I took a lot of profits then because I thought the market was a little bit over expensive. And then we had the crash, which was not in my plans. But I sold it about 10. I think I sold it exactly $10, but I kept a portion. And then the share price went from $10 all the way back down to 50 cents. I was trading a little bit, but I've maintained that small holding since I sold. And now the share price is back up to where it was at $10. So that holding has gone from, like, it's a 10 bagger. In fact, it's a 20 bagger from the bottoms. And the holding in Electro-Optics has gone from 5,000. I think it was worth $5,000, maybe even more than that. Went all the way down to less than 1,000, and it's gone all the way back up to 5,000. Anyway, so Electro-Optics is just a company I've held for a long time. And all the other companies are Zero, Westech, Tours. I participated in the capital raising, but I did take profits. Although I was thinking of taking profits again, but then I had a look at the chart and went, oh no, don't take profits, just maintain a holding because the chart looks pretty good. Telix is the one I am a little bit regretful because I did see the shift in sentiment and change in trend, and I decided not to take profits with this one, I think. And the share price has dropped a fair bit. I wish I did take profits with that one, like I did with other ones, like Seek, Steadfast, REA Group. Anyway, I do have MinRes. I would not classify MinRes as a high quality anymore. Anyway, hopefully I've answered your question. That are some of my holdings. Ben Coleman says, are you thinking the dip in Hillgrove is a buying opportunity as copper and gold continue to increase in price? I was a little bit disappointed with their Appendix 5B and just how I think I did have a bit of a rant, but it wasn't a sell. It was not a sell for me. So it all depends. I'm not going to recommend Hillgrove as a Specky buy, or they are in production, so not really Specky, but their Appendix 5B was a little bit of a disappointment. But if gold and copper prices keep on going up, I would say Hillgrove Resources share price should keep on going up. They should. But this company has been a disappointment for me since I discovered them. Well, how long ago was it? 3 or 4 years ago? It's been a big disappointment. Ben Hutchison. I like Cogstate update yesterday, but noted that the rally was heavily sold into, and that continued today. Seems likely it'll be available for less in coming weeks. A solid pick in my opinion. So I had been trading Cogstate, then I got out. Then they released a nice little upgrade. Was it an upgrade or update? I expected the share price to maybe gone on a nice, better rally. It didn't. And I think the reason why is because the share price had dropped a fair bit. We can see it. Share price tried to rally and it failed. Share price up, was it 12% on the 19th of December, and it got sold into, and you can see the share price struggling. I don't like the chart at this point because when they did release the update, the share price did not rally at all, which sort of surprised me. I thought this could have been a bit of a trading opportunity, but no. And the share price down a little bit, down to 225. So the chart definitely, or sentiment definitely has shifted from positive to a little more negative. And it's really because of that negative update they released on 10th of December, which I don't think was that negative. And I think it's proven that it wasn't that negative by what's happened since then. Share price actually gone up. If it was really negative, share price would have kept on going down. But I just think there would have been a lot of people who bought at higher prices who just want to get out, and there's a little bit of resistance. And the other thing is the volume was really weak. So not a lot of volume, not a lot of interest, even though I thought the update was pretty good. So I sort of agree with Ben Hutchison. I thought the update was good. And it's just the market's not interested right now. Don't know why. Rogel Dawn says TLG received their long-awaited Swedish mine approval yesterday. Interesting to see what it does in the next few weeks. Is that Talga Gold? No, Talga? Something Talga. Talga Group. Chart is just going sideways. In fact, what I'll do in this sort of situation is I put in the line there, and I'll put in a line probably around about there. It's not exact, so it's trading in a channel right now, and what I'll be waiting for is a nice breakout above that channel if you want to trade it. Let's have a look. Talga Group. So did they release? Did they receive this? When did you write this? 8 hours ago. So they received it today. So I'm assuming Swedish time, not our time. So it's going to be interesting to see what the share price does on open on Tuesday. Are they dual listed? Is Talga dual listed? Let's have a look. No. So if they did release it, receive it on Swedish time, that was after our market had opened, I would expect the share price maybe to rally. Eagers Automotive and PWR down on Friday. Oh, some car places. Now, Eagers Automotive chart was sort of looking weak, and then the share price was looking a little bit strong again. Share price was up 5% on Thursday and down 3.88% on Friday. So I actually don't mind this chart. So this little bit of sell-off on Friday could be an opportunity. Probably the reason I wouldn't be trading this one is the P ratio, the valuation. P ratio 36.95. It seems a little bit stretched for this type of company. I could be wrong, but it seems a little bit high. The other one was PWR. What is it called? Peter Warren Holdings. Yeah, down 5. That is a fair bit, 5.41%. The other one is Automotive something, ASG, Autosports Group, and they weren't down. Don't know what's going on. It could be just coincidence. I'll get these comments a fair bit. Hedgie Reggie says or asks, can you show and explain which exact indicators you have selected and use on your TradingView? I'm pretty sure I have done a video on this, but okay, so this is typically what I do or use. We'll have Autosports. So I have 5. Well, I'm going to ignore volume. So volume should be self-explanatory. That's in the bottom. I use candlesticks. I just prefer candlesticks. I think the reason I do is because you could use lines. I think lines suck. You don't get much information. Well, you get a little bit of information, but a lot of other people use bars. I just don't find bars to be all that fascinating. And I just like candles. I just like candles. They just look better for me. And I can get a lot of information from just looking at a candlestick. For bars, I have to look a little bit more closely. Anyway, so candlesticks, volume, and I just use a very simplistic, very easy, because I like to simplify what I use, moving averages. So I use 25 and 100-day moving averages here. We also, on occasion, will look at 200 period moving average, particularly if I'm looking at the weekly chart. But I don't like a lot of stuff on my chart. So usually it's only 2 moving averages. And the other ones I sometimes use are moving average ribbons. I don't mind these as well. I do like these because you get a sort of a sense of the trend. You see green, uptrend. You see red, downtrend. And you're looking at different time frames here. So shorter term and the longer term. So for instance, Auto Sports Group in the shorter term, sort of maybe a bit of a downtrend trying to develop, but in the long term, it's still an uptrend. The other one I like to use was, what's his name? It was a moving average. Gee, how have I forgotten his name? I don't think I've got his book here. I don't have a lot of the books. Anyway, another one I like to look at is a lot of moving averages, but it gets a little bit too hectic. This is, what's his name? Daryl. Anyway, I do prefer looking at moving averages. Now, there are indicators I do look at on occasion, but very rarely. RSI, that sort of thing. But I do tend to know if a company is oversold or overbought. It's fairly simple just looking at it. So those, I just want to keep it as simple as possible because I've seen some technical analysis people have a million things on the chart. And I mean, you can put as many things on your chart as possible, and I think you're overthinking it. So for me, it's just keep it as simple as possible. What's that saying, KISS? Keep it simple, stupid. I think there's a lot of validity in that. And I've got also a golden cross. So if why is this one? Oh, okay, yeah. There we go. And finally, nothing to do with investing at all. Young gun, why do you have the Greek islands as your start screen? I was like, what the heck does he mean by start screen? He means the thumbnail thingy. Thumbnail thingy. I just find a photo, a free photo. There's all free photos in the world I like and just put it into the thumbnail. And that is why every single day you see a different photo. Different photo every single day. And in fact, I'll just show you. These are the photos I got. I just put them into a PowerPoint and I've got maybe 30 lined up and all these different photos. And we've got the most recent one somewhere down. There we go. And then what I do is I just go copy, paste, change the date. The next trading day is going to be 27th. And it is this simple. And these are all free. These are all free via Pixel. Pixel. Free stock photos and videos you can use everywhere. And a lot of times I'll just put in a theme like landscape. If I can spell. And also there's a filter here. I want horizontal. And you can do by popular or newest. I'll just do popular, and you can just find photos that are free. Like here's one. Oh, that's a nice one, isn't it? Maybe I'll put that into my next. In fact, I might do it right now. And not right now, but anyway. So that's exactly what I do, and I just like doing that. With me, I just like photos like this. Anyway, if you do have any questions, any thoughts, leave those in the comment section of the video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.